Dear friends, welcome to Rudresh Arthopadyaya YouTube channel. Today we are going to discuss about basic understanding of the economic system and also how the economic machine overall works. The term demand, we all know, demand is the consumer's desire to purchase a particular good or services. The market demand is the demand for a particular good in the market. Listen carefully. Demand or wants in the economic system are unlimited. In an economic system, resources such as goods and services are limited, but human wants are unlimited. Humans desire for different commodities in their life scale. Human desires increases like a mountain. If we have a bike, we desire for a car. If we have a car, then we desire for a bungalow. If we have a bungalow, we desire for something else. Like that, wants are unlimited, but resources are limited. Dear friends, please understand, resources, whatever we have in our economic system, are limited. Resources are always scarce. They are in shortage, like coal, petroleum, land, and nature. We have to use all these limited resources efficiently. Utilizing limited resources to meet unlimited desires or wants of human beings is called economics. Dear friends, let me repeat here. Economics is the understanding of how human beings utilizes the limited resources to meet unlimited wants of the human beings. All wants cannot be met at the same time. It is quite obvious to understand because wants are unlimited and all wants cannot be met at the same time. They will be met step by step, one desire or want after another. Please note, people make efficient choices to satisfy their unlimited wants because all of the wants cannot be met at the same time because of budget constraints and limited resources. Example, if you want to buy a laptop and a mobile because your budget is limited to 20,000 rupees. Listen carefully. If you have 20,000 rupees only with you, you may buy either a mobile or a laptop because for 20,000 rupees you cannot buy both of the goods. Because in this example, we are assuming the cost of mobile is 20,000 rupees and the cost of laptop is 20,000 rupees, which means any one of them you can buy. At the same time, you cannot buy both the goods. Any one good you can buy because your budget is limited. By spending 20,000 rupees, you can buy either a laptop or a mobile. To have one good, you have to give up another good. Meaning, if you want to have mobile, you have to give up laptop. Or, if you want to buy laptop, obviously you have to give up mobile. To have something, you have to give up something else. This is called opportunity cost. Please remember, opportunity cost meaning that is the cost of other alternative when one alternative is chosen. In the example, to have mobile, you have given up laptop. Getting the point? You might have chosen to watch a movie today in this time, or you might have chosen to play cricket instead of listening to this video or watching to this video. But the opportunity cost of watching this video class is very high for you. That is the reason you are spending your time here. meaning you gave up watching movie or playing cricket for watching this video. Getting the point? So dear friends, the word economics actually originated from the Greek words, that is oikonomos. Oikos meaning household, nomos meaning management. If you put both of them together, that is oikos and nomos, put together it becomes oikonomos, meaning household management. Household management. Economics is the study of how societies use scarce resources to produce valuable goods and services and distribute them among different individuals. The produced goods will be distributed to individuals. The produced goods will be distributed to individuals and factors of production. What are the factors of production? Listen carefully. Land, labor, capital, and finally the entrepreneur or organization. Obviously, land receives rent, labor receives wages, capital receives interest, and entrepreneur receives profits. Getting the point? Whatever the production happens in the system, this will be produced by these factors of production, and in the end of the day, they will be redistributed to these people only. Example, I am not producing slippers, I am not producing books, I am not producing groceries, I am not growing any vegetables, but every day I will use all these commodities in my life, which means they are all produced by somebody else and distributed to all. That is how we are all connected together. By using these factors of production, we are producing more and more goods. Please underline this. We are producing more and more goods. Why? Why are we producing more and more goods? Because wants are unlimited. To fulfill these unlimited wants, we have to produce n number of goods in the system, and those goods will be produced efficiently, keeping in mind the limited resources. The subject, economics, divided mainly into two parts. They are microeconomics and macroeconomics. Dear friends, let me tell you, microeconomics is the study of small economic units, meaning it is the study of individuals, a study of household, and study of one firm or study of one industry. Which means if you study this on an individual level, it is called micro study. Example, if there is a study of how human behaves when the price increases, when the price decreases, how the household thinks when the taxes are reduced, when the taxes are increased, which means we are studying in this case with respect to the particular household. It may be a middle class household, it may be a rich class household, whatever. Right? So macroeconomics is the second classification. In the second classification, we have macroeconomics. It is the study of integrating all micro units. If you integrate individuals together, it becomes one economic system. If you integrate all the households, all the industries, all the firms, we will call it as macroeconomics. We are not studying only about one particular unit of industry. We are studying about industries, that is macro level. Example, national output or one of the national income concepts, that is gross domestic product, GDP, is also a macroeconomic concept. Inflation is a macroeconomic concept. Overall prices is a macroeconomic concept. Demand, supply of the overall economic system, and unemployment, poverty, these are all the macroeconomic concepts. So in our study of basic economics, today we have concluded understanding how exactly the economic machine works and also the basic understanding of economics. In the next video, we will be discussing about the continuation of this part.